Thank you, Anna. Anna should really be running this panel, who's far more knowledgeable than I am. Due to the, okay, this is weird. We're basically lower than you are. It doesn't make any sense at all. Okay, well, we're just going to be in our sort of relaxed position. Those of you at the back will have to kind of imagine this. And now, you have microphones, marvelous. Okay, my name's Mike Butcher. I'm editor-at-large at TechCrunch. TechCrunch, we normally, you might remember us from this thing called Web 2.0. Do you remember that? Little joke. I hope you'll all be nice to me on Twitter. Last time I had to do crypto panels, I interviewed the CEO of Ripple, Brad Garlinghouse. About half an hour later, I was a meme on the internet by a lot of Ripple and XRP fanboys and girls who were rather annoyed with me. It was great. It was really great. Let's talk about this. So, a little bit of background. If you cast your minds back to 3,800 BC, I'm sure many of you still remember those wonderful Babylonian era times when the cadastra was a clay tablet which was effectively a token. It was a token, a 3,500-year-old token which would register people's ownership of land on a database. So this idea of tokenization isn't exactly new. Now the question is, how far can we take it? We're going to sort of unpack this a little bit, but we also want to talk about these people's businesses, which are very interesting and hugely cutting edge. Zoe, now who's heard of Neufund? Put up your hand if you've heard of Neufund. Oh, well known. Now, who's heard of Jibrel Network?
Thank you.
Similar, but slightly less. We'll do more. We'll educate everyone. I'm going to start with you, Zoe. Now, can anything... Now, let's just do this first, shall we? Can anything be tokenized? There are now people who are saying Materium says it could tokenize a Stradivarius violin. I wrote about a company in Switzerland that's tokenizing luxury cars. Let's kill this off first. Can we tokenize everything? Anything? Go.
What does tokenization mean, actually?
I don't know. You tell me.
Yeah, exactly.
You could represent anything in a token, but would it be useful? Like, I could tokenize your shoes, but what do we do then?
True, but is it valuable? What's the point? Is it this common ownership concept that's being propounded by startups like Proppy, for instance, where anybody can own half a square inch of a Manhattan loft, etc. How useful is that?
Look, I think it's useful if you
hold it closer.
So the tokenization of assets is useful if you can embed, or if you gain value by embedding code into the asset. So for example, what tokenization allows us to do is to have assets act in certain ways that are predefined that was previously not possible. When representing, for example, a bond in paper format, or when it's sitting in Euroclear, you can't have it act in a specific way based on predefined metrics.
Sorry.
Well, yeah, I agree in principle, right? Because tokenization, we actually refer to putting, the forms like paper, right? Like forms of ownership into smart contracts, into tokens, understood as smart contract, typically Ethereum smart contracts. And indeed, I think that there's big value if you are able to encode something. Sometimes we call it programmable shares, sometimes, or programmable assets.
Right.
And there are some, because it sounds very abstract, but already today you can think of some like really, really, really specific examples. Like for instance, if a company is paying a dividend, right? There's a reason why we pay dividends to shareholders once a year, right? It's the administrative reason. But if you could pay it out in real time because it's in smart contracts, then it could be a very useful thing, right? So there's plenty of this kind of cases, and that's where the value is.
But it would appear to be the case that most of the disruption in tokenization is happening in the fintech space, and that's largely why we're all here. Let's talk a little bit about Neufund. Now, did you do an ICO or didn't you?
No.
Why?
We didn't do any ICO.
Why?
Well, we were VC funded at the time, and we didn't need any money. And also, the ICOs, the way they were done in 2017, there was this concept of utility token. I don't know if anybody still believes in this concept. I mean, we never believed in it because because you can't it's counterintuitive if you have any economic sense to put a token that is representing some value or is supposed to give you access to some usage, some network, together with an investment purpose. And why? I mean, you see it very clearly in Ethereum. Like if you are building any app on Ethereum, if you are paying for transaction costs on Ethereum platform, then you are paying for this in Ethereum. So if Ethereum goes up, then your price goes higher and your cost goes higher. But if you're at the same time having Ethereum, because you invested in it, then you're very happy if the price goes up because you get more money, right? So kind of conflicting interests of investor and user are very visible here. That's a classical utility token. You can't mix these two functions.
You raised 15 million euros, is that correct?
Well, so let's make it a bit simpler. So there is the money that we have raised for a company to fund or pay for offices and salaries and all of that. So this is a mix of we did some rounds of VC funding, like a classical VC funding, and we also did December this year what is called equity token offering, right? Which is a regular share in a regular company represented as a token. It is not giving you access to any utility functions, it's just a share.
So supposedly this was the first legally binding public offering of securities on blockchain.
Equity tokens for sure. Yeah.
Definitely the first?
I think so.
Does that mean you're in the Guinness Book of Records?
Yeah.
I'm joking. Why was it the first? How could you have been the first?
What do you mean how? I'm just the first one that did that.
You beat everybody else?
Mike, you know me for so many years.
How is Neufund operating now? What's its plan next?
Well, more equity token offerings of more companies.
And?
And more, and more, and more.
And why?
No, I mean, the way we look at blockchain and all this equity tokenization of equity is actually like a next stage of fintech technologies for public offerings and the next generation of how you finance, in particular, companies. I mean, not only, but right now we focus on companies. So for us, it's like fintech next level, right? Tokenization of shoes or these things. This is not very interesting to me. I don't think that there's a big value in that. You can of course tokenize other securities, I don't know, property or bonds or whatever. Right now we focus on equity primarily. Why we focus on equity primarily? Well, has any of you ever tried to do an IPO? It's a big deal to do an IPO. I mean, it costs a lot of money. It's very complicated. If you are an innovative company in particular, a technology company, a startup, even later stage, then doing an IPO is super inefficient, actually, because on the stock exchanges today, the investors that you have that are investing are typically not the investors that are interested in high-risk investments, and they're not the investors that are interested in looking at your product and your vision. Those are the people that are used to invest in, old companies, analyzing financial data in Excel, often not even knowing exactly what the company is doing. So, there's nothing wrong with it, right? But in fact, this is what the stock exchanges are doing today. And there is not really any public markets for companies to raise money that are in this, what we call pre-IPO phase.
Okay, I actually want to come back to this subject. I want to turn now briefly to Talal. Now, Talal, you're doing Jibrel Network. It's a stable coin, correct?
So a stable coin is part of what we do.
Part of what you're doing. Just explain what it is Jibrel Network is, and let's hear that.
Before I get into that, I'd like to make a differentiation between security tokens and tokenized securities.
Right.
Those phrases are used interchangeably, whereas they're actually different. So a tokenized security is a traditional security that we have in everyday world represented in a token, whereas a security token is a fully new issuance done on-chain. A good analogy to understand that is look at the internet and what it did to information. Historically, we had newspaper printed and then moved online. Now, imagine you had to print out all the content that's on Facebook, right? It would go in a museum. So basically, now we're moving traditional assets onto the blockchain, but in 10 years down the line, the assets will be on-chain from the get-go. So what we do at Jibrel is we move traditional assets on-chain with focus on debt instruments at the moment. So we're big fans of Neufund.
We're big fans of you.
Thanks. But we're focusing primarily on debt today because for us it was opportunistic, to be honest.
Why? But why then?
Okay, I'll explain. So you mentioned stablecoin. Stablecoin is the first thing that we issued We issued US dollar, euro, British pound, and Korean won stable coins, but not the stable coin that you know, for example, as Tether. So our stable coins are not listed on exchanges. That's primarily because of AML issues. So today, let's say I tokenize a specific bond, and I have to pay dividends or profits. If I pay that in Ether, it's going to be very difficult, first of all, to convince the investors to accept that, or the issuer to accept that. Whereas in our case, the stable coins that we have are designed to be fiat outputs of smart contracts. And I specifically, so we looked at the most fragmented industry within, or sector within financial services, and for us, we found that to be Islamic finance. Part of that's because we understand, the founding team has a good understanding of that industry, and it's not as popular. So it's like a low-hanging fruit where we can say, all right, this is how blockchain can actually be useful.
So there is this concept, you were telling me earlier before we came on stage, that there's this concept called the Islamic sukuk, which is like a bond. So tell us about how an Islamic sukuk will work in this era of tokenization.
Great. So since we mentioned that Neufund were the first to do equities on-chain, we did the first transaction of sukuk on-chain, and that was a private placement transaction for an investor from Dubai buying a tokenized sukuk from a government-owned bank in Abu Dhabi.
And what is it exactly?
Right, so it's basically a bond, all right? They just call it sukuk because interest is not allowed in Islamic finance. So that's a whole nother discussion point, but for me, I think it's, if it quacks
but
like
this is particularly fascinating because it has to be backed by assets, is that right?
Yes, which is why it has an even better blockchain use case. So today, an Islamic bank, in order to facilitate the liquidation of a loan, they need to buy assets to back that up. So today, they call up the London Metal Exchange. You can imagine how inefficient that is, where you have working days of Sunday to Thursday in the Middle East, and London's open from Monday to Friday. So you have just a couple of days considering the working hours to actually make the trades. So with the tokenization of commodities, banks could algorithmically purchase these tokenized commodities and facilitate the sukuk. So in our case, we had to convince the central bank, the regulators, etc., to do it.
In which jurisdiction?
In the United Arab Emirates.
Right.
So we're a Swiss-based company, but we have most of our business in the UAE. I was with PricewaterhouseCoopers in the UAE. Our CEO was with Deloitte and Oliver Wyman, also in the UAE. So we did a lot of consulting for banks.
All I don't know is exactly how transformative it is to do this, especially in an Islamic banking setting.
All right. So it's also important to understand what you're doing at each point of time, right? The first project that we did had minimal, let's say, real-world value. The only value it had, it removed the paying agent. Today, in the process of issuing bonds, you have not a million, but you have so many intermediaries. One of them is the paying agent. The paying agent has to calculate how much each person in this room is holding from the bond, and then they send them the profit or dividends. When you do it in a smart contract, if you're holding the sukuk token, you automatically get the profit payments. And since it's a centralized system, you can only transfer between whitelisted addresses. And that basically gives the bank peace of mind. But going forward, I think this can be hugely disruptive because as it is today, the industry is not efficient at all.
This is absolutely really fascinating, especially in the Islamic banking setting. There is something about this whole era now that effectively we could be looking at the replacement of the entire fintech industry. But what does that actually mean, Zoe? I know you're quite passionate about this subject. Is it the case that fintech itself, the fintech, we've got challenger banks in traditional fintech going on right now, is going to start butting up against, or rather in reverse, blockchain is going to start butting up against the fintech?
Yeah, I think so. I mean, what Talal said is already quite some examples of this because it goes deeply into removing a lot of intermediaries, right? I mean, today, there is a whole bunch of technology that is running our financial system, right? And there's example like Clearstream, for instance, which is basically responsible for the transactions on stock or registering transactions on stock exchanges for the clearance, right? you know, in order to sell a share to someone, needs to go through a bunch of intermediaries and get registered and then cleared and so on. But you know, if you think of this, then blockchain really does it kind of systemically on its own, right? So already this whole part is going to be, well, it needs to somehow be removed, and it makes sense. You know, I think this is going to be deserved. It makes sense to exchange it, you know, not for Clearstream and not for the incumbents, but for the rest of the world, because it makes it all a lot cheaper for all of us, a lot more accessible.
What is the sort of how disruptive is immediate settlement in this process, would you say?
Well, from
all right. Take the first cut. It's a huge question, yeah. But basically, I think you can relate that to something called infrastructure inversion, right? So you mentioned StreamClear or Euroclear. Infrastructure inversion is when you use old technology for something that's new. Think of how the internet used to use ADSL and modems of telephones. So they used the telephone system to get internet across, which was infrastructure inversion. So they used old infrastructure to do that, but now you have cables. The same will happen with settlement and clearing. Like one of the conversations we have with the regulator when you want to tokenize a bond is like, all right, who's your clearinghouse? Whereas if you're actually doing it on chain, you don't have a clearinghouse. You don't have a paying agent. So in terms of, this won't be infrastructure inversion, it'll be infrastructure replacement.
Exactly.
What will happen then?
So I guess similar.
A lot of people are going to lose their jobs, yeah. And a lot of new jobs are going to be created, you know.
Who's excited about that? I guess that's why we're all here. What are the kinds of issues? I think one of the other things I think about this is that it is hugely transformative. Is the you know, zooming out from the sort of context at the moment, what is the so-called crypto winter doing in your industries, in your sectors? Is it improving it? Is it making it better? Is this the time to be alive? What's going on?
So yeah, it's a double-edged sword, right? Mm-hmm. Because as soon as you say the word crypto in front of any bank, the immediate reaction is like, they're not sure whether they want to work with you or not. But crypto winter, as it's now coined, is basically good because it weeds out a lot of the quick win
it does the same thing that, you know, 2001 did to the .com, right? I mean, you know, internet is still here and it stayed and created a lot of value, but there was equal amount of hype back then in 1998, 1999, right? So, and then, but you know, so many great companies have been built, created, and they stayed. And you know, we were never at Neufund dependent on the crypto money, as in, you know, we were never spending crypto assets on our operation. I think it was a good decision. Yeah, I think I like it. I mean, you know, suddenly, you know, the discussion is, you know, away from, you know, hype and into real fintech discussion. So yeah, that's good, I think.
You're both coming from two different sort of regions, angles, I suppose. Berlin is quite a hotbed. I know you're based in Berlin, quite a hotbed of blockchain now. Mm-hmm. And Tel Aviv, you said, interestingly enough. And you're coming from it from both Switzerland and also the Middle East. How transformative is this viewed in the Middle East? Is it still viewed with skepticism, or is it gradually being accepted?
So there's a huge difference when you say the Middle East and the United Arab Emirates, or Dubai.
Okay.
So the Crown Prince of Dubai launched the blockchain strategy, where he wants Dubai to be the blockchain capital of the world by 2020. That obviously is a top-down approach, right? When you have the head of state or the...
Do you think that's likely?
So I think it's... So I don't think that is a specific goal. There is no... It's not like the World Cup champion. There's no award for it. But it definitely had a huge ripple effect. Not ripple the company, but sure. it had a great effect where I go to speak to a government-owned bank, and they're actually willing to listen and test it out. So I think it's a great initiative what they've done. Land registries are already moving on chain, so a token would essentially become your title deed. This is obviously all done in test environment.
Have you had any chats with Saudi Arabia by any chance?
Yes, we have.
And
it's going slowly but surely. If anyone's worked in the Middle East, they know that the real money is in Saudi, but it's a lot more bureaucratic, and they'll follow. So, sorry to take a lot of time,
No,
but
sure.
this project called Aber is a shared platform between the UAE and a Saudi central bank for instant settlement and clearing. They're developing it at the moment. So instead of UAE and Saudi banks going through SWIFT to settle and clear, they're creating their own system, which is a private network between these central banks and the registered banks, where it'll be like a master and slave kind of system, where the central bank has obviously the centralized control.
So we're in Zug, not in Berlin. Are we in the right place?
I'm for the first time in Zug, actually, I realize. That's strange, isn't it? So I don't know. Berlin is certainly, there's tons of blockchain companies in there, but you're probably asking about the approach of the government or the German government to the cryptocurrencies. Germans, langsam, langsam, aber sicher. So, stuff is happening. It's happening slowly. I am hanging out a lot in Bundestag. There is new regulations being created. Germany has Deutsche Börse and has Frankfurt, has a very huge, very strong financial institutions and a huge market. So they are careful, right, because of all disruptive effects. I mean, you see the same thing in the US, right, or in London to some extent. So all these countries where there is very, very strong financial markets, they're kind of careful about what's going on with blockchain. The same is in Tel Aviv, for example. Tel Aviv is very influenced by the US, so it's also very... But I think that we are in Berlin for a reason. We're also regulated in Germany, so it's possible, right? And yeah.
Well, I could actually talk to you for hours about these subjects, but especially from the regional perspectives you have. But I've been told that we can do some Q&A, and haven't got 10,000 people like we do at Web Summit. So let's do some Q&A. Thank you, Anna. Put up your hand. If you have a question, say which company you're with. Don't just ask questions. We'd like to know if you've got an axe to grind or something. And stand up. Yeah.
Hi there, Edward from the Web3 Foundation. I have a question not related to the foundation or anything, but what are your favorite jurisdictions and why? You don't have to give me a big laundry list, but just a couple. Okay,
go. UAE or Zug?
Such a loaded question, I don't know if it's a... I mean, any jurisdictions, which see already that blockchain is an inevitable change, right? So I don't want to drop any countries, any names, but of course you will have resistance, and you will have also very open jurisdictions. It is largely, I think, a political question rather than a legal question. I think we had a discussion about this earlier in the couloirs, because the law can be the same in different European countries, can be even written in the same language and letter by letter the same. The Swiss law is not very different from German law, by the way. The law here in Zug is not very different. But it's the approach and the interpretation of the regulator, whether they want it now, later, careful, observe the world. So it's a political question.
Yeah.
Yeah.
You asked a controversial question. I'll give you the controversial answer. One hand doesn't clap, right? Swiss Crypto Valley has one of the best regulations out there, yet you have a lot of crypto companies with no bank accounts. So basically, what I'm trying to say is that you need several things to come into place for you to be able to tokenize assets. So I'd say go to your neighborhood, which is probably why I chose Dubai. I worked there. I've consulted a bit for the banks there. So if I wanted to go to JP Morgan and tell them, hey, let's tokenize your bonds, they're going to shoot me out the door. But if I wanted to schedule a meeting with a CEO of a bank of somewhere where I've actually worked, it might be a bit easier. So
just add something for this. If you need bank accounts, you don't have to go to Dubai. You can also...
Bank accounts are here.
Yes. So there's also banks in 3 other European countries. So that starts to work.
In the interest of time, we're going to take 3 questions in a row, and I'm going to be very strict. I just want you to make one sentence in the question. So we'll do three in a row, and then we're out of time. Go.
All right. So
stand up.
Yeah. My question is, why blockchains? I always think from people from old finance, why don't you just go to the exchanges and, like the real, like the not the LHC, London Stock Exchange, or the banks, and implement programmatic money layer, implement tokenization, like a public layer tokenization on the exchange. Are the incumbents so incumbent or slow or stupid or do they refuse?
Okay, great. Good question. Why do blockchains instead of just programmatic money? God knows what the hell that is. Go next. Go next. Any other questions?
Oh, do we answer?
Okay, well, that's a good question. Let's go for it.
Well, why is it difficult to work with stock exchanges? I mean, the same way Microsoft has never built an iPhone, right? I mean, this is not a, it might make sense for the organization, might make sense for the world, but that's one thing. And the other thing is whether companies are ready basically for disruption. And companies are typically not ready for disruption, in particular if they are successful, and the stock exchanges somehow are successful. So they are victim of their own success and just not moving. That's been true for startups, with internet, with everything.
Talal, any thoughts on that?
I think it's something to do with human nature, right? If you're winning, you want to keep winning, you don't want to get anyone in. That's a problem that I personally have when I come to the crypto industry wearing a suit and I'm perceived as the banking industry, whereas you go to speak to the banking industry and you're perceived as crypto. Stock exchange doesn't want to change. They're making big fat profits. They don't want to listen. So eventually they'll be disrupted just like, yeah.
Okay, I'm gonna end this now with just one last thing I would like to know from both of you. What are your main predictions for the next year, 18 months? Zoe can start.
The main predictions for the next
next year, next 18 months, next 2 years.
Well, blockchain is certainly here to stay. I mean, I think that, the regulation doesn't matter. The politics certainly is going to open. This is happening, just like internet has happened. A lot of companies are going to go away, in particular those that were financed with funny money, unfortunately. Very simple. And yeah, I mean, we're going to exchange, I think. We're going to see, I think, this year for the first time that blockchain is fintech and these real cases of exchanging the infrastructure are going to happen.
All right, I'll give two predictions. Bitcoin will be predominantly used to escape capital protections. So you have the incoming wealth tax in China. You'll see a lot of Chinese money going into Bitcoin and then from Bitcoin to safe havens. The second is that you'll see cross-jurisdictional collaboration. So today you have regulations in Switzerland, Dubai, Germany, whatever. You can have a bond listed on 2 digital markets per se. So that's something that will probably happen in Europe, which makes a lot of sense, and then expand to other countries.
Fantastic. And of course, I'll have to reserve my question about whether Britain, post-Brexit, will become the Bitcoin blockchain nirvana or something akin to Kampuchea year 0 for another time. Thank you very much to our panel.